Right, so let's get started with today's question, which is quite a long question, looking at some calculations as well as the analysis of the actual cash budget. So we're going to start off by looking at the information given to us. So as you can see, we've got Benko Limited. Let me just quickly get a pen out. Right, and I'm given a cash budget for 3 months ending 30th of September 2016. So the months that we are looking or preparing the cash budget for is the budgeted month of July, August and September. So immediately the first thing that I notice, and you guys should have noticed as well, is that there are figures missing. So as you can see, we've got A, B, C, and it goes on all the way down to G. So immediately I'm given an incomplete cash budget. Okay. Right, then let's look at the next bit of information that is given to us. So we know we've got an incomplete cash budget. Then our additional information. So I'm going to go through this very briefly because obviously as we answering the question, I will look at this information in much more detail. So information 1, I've got the income statement for the financial year ended 30th of June 2016. And remember, this is obviously actual figures that are given to me. Right, it's obviously for a year, and I know it sounds silly, but remind yourself that a year is 12 months, just in case you've got to calculate figures using the yearly figures. Right, so there's my income statement, an extract given to me. And then I've got number 2, the following balances appeared in the books of the business on the 30th of June 2016. So once again, actual figures. And as you can see, these are figures from the balance sheet. Right, so I've got ordinary share capital. Remember guys, your ordinary share capital is always at no par value. So that 1 rand, I'm just going to change that to an average price. So let's take it as an average price of 1 rand. Then I'm given a loan, SARS income tax, very important. There's a debit balance, cash at bank, also a debit balance, shareholders for dividend, ordinary share dividends given to me. So an extract from the balance sheet and a bit of retained income, the note itself. Right, then the next bit of information, I'm given actual sales, what has already taken place, and then projected sales, what I've obviously budgeted or I'm forecasting. Right, then information 5, very, very important, and we're going to get to this information as we're looking at the calculation. The markup will be maintained during the next year. So in other words, whatever markup was used for the previous financial year will be used in the next financial year. So remember, this point here, very important. Right, information 6 talks about inventory, and we're going to obviously read through this in more detail as we get to the calculation. The next bit of information, number 7, 40% of all sales are for cash, which means 60% is on credit. So I'm going to write that down because again, I'm going to need this as I do my calculations. Information 8 tells me how debtors pay their accounts. So what's the debtors collection policy of the business? And once again, this information becomes relevant when we get to the actual questions. Right, let's just quickly scroll down. As you can see, quite a long question, lots of information, guys. But remember, that's accounting, lots of info. Information number 9 talks about salary. Information 10 talks about amount owing for final dividends for the 2015 year end. Information 11, variable operating expenses vary in direct proportion to sales. So something else that's quite important. Information 12 talks about your loan. Then I've got information 13. There will be no increase in other expenses, and these are spread evenly throughout the year. And then finally, information 14 talks a bit about the issuing of additional shares at R1.50 each. Okay, so as you can see, quite a bit of information, and we're now ready to tackle the questions. Remember guys, very, very important, always scan through your information first before you start answering the question. I know you're probably thinking, but hang on Mahesh, that takes a bit of time. It does, but remember, sufficient time is allocated towards reading as well. Don't just start scribbling or writing. Make sure you read very carefully. Okay, so let's now start with our questions. And the first bit of questions is about calculation. Remember, we were given an incomplete cash budget. So now we need to calculate missing figures from A to G. Okay, so let's get started and let's look at A first. Right, so I'm going to quickly go back to my cash budget, and information A is obviously for the month of September, what is my cash sales? So I want to just write that down. Information A is cash sales, okay, and it's obviously for the month of September. So if I now go to my additional information on the previous page, let's quickly find that. Okay, so remember guys, you're looking at the month of September. Your projected total sales is 70,000. So remember, 70,000 is obviously my total sales, and I want only cash sales. So if we go down to information 7, 40% of all sales are for cash. Okay, so I've got total sales. I obviously only need 40%. I think let me write that down on my answer sheet. So I've got 70,000 total sales. I need cash sales, and that represents 40%. So my cash sales, let's just get our calculator out. Okay, let's get this one here. There we go. Should I make this bigger? Can you guys see this? I'm sure you can. Right, so 70,000, okay, times 40%, and that is giving us an amount of 28,000. So let's just fill that in, an amount of 28,000. Right, shouldn't have been too difficult, guys. I'm sure you would have calculated that already. So to start with, something quite simple, quite straightforward. Right, let's now move on to B. So let's go back to our cash budget. And what is B? What do we need to calculate? So B represents my cash from debtors. Okay, and obviously it's for the month of August. So I want to fill that in. So I'm calculating cash from debtors. Okay, so cash from debtors. And I'm obviously looking at the month of August. Okay, right. So here, obviously, very important, I'm focusing on credit sales. Okay, and I need to look at how do my debtors pay me each month. So let's go to that information, and now let's read our information very, very carefully. Right, so once again, here's my sales that's given to me. I've got actual sales, okay, which is obviously a total, as well as projected sales, which also represents your total. Right, information 8 tells me how my debtors will pay their accounts. So let's read this information. Your debtors collection policy of the business is as follows. Collection within the month of sale. Oh, let's just fix that, guys. I just want to quickly get an eraser so we can fix that, because obviously that doesn't look too good. Right, let's get the pen out. Let's try and go for a different color pen maybe. Right, so our debtors, how do they pay? Collection within the month of sale is 25%. So remember, if I sell in June, 25% will pay in the month of June, 25% of my debtors. Then collection in the month following the sale of goods, and this is obviously 1 month later, 60% of my debtors will pay. So I sell on credit in June, 60% will now pay 1 month later in July. Right, and then I've got collection in the second month after the sale of goods, 2 months later. So once again, if for example I sell in June, 12% will pay 2 months later, and that is obviously in the month of August. The rest is to be written off as irrecoverable. So this is obviously your bad debts that doesn't affect your cash budget. So remember, unless there's a separate question about bad debts, you can actually ignore this info. Okay, so going back to the actual information itself, or the question rather, not information, how much of cash am I receiving from my debtors for the month of August? Okay, so let's get started and let's look at our total sales, working out our credit sales, and we're going to take it from there. Right, so if I start with the month of May, so think about it very, very carefully, guys. If I sell on credit in the month of May, so clearly, right, looking at the way the debtors pay, 25% will pay in May, 60% will pay in June, and 12% will pay in July. But remember, I want to calculate how much I'm going to receive in August. So the month of May can actually now be ignored. Right, so I don't really need to worry about the month of May. I can ignore the month of May. Right, let's start now with the month of June. And remember, June, your total sales is 84,000. I obviously need credit sales first. So what I'm going to do is I'm going to start off by working out for the month of June. Right, so for June, my credit sales, 84,000 is total sales. But remember, credit sales is 60%. Let's just quickly check that. I'm sure it's 60%. I think I did write that down somewhere below. Okay, so remember, sales, 60% is on credit, right? So if we multiply that by 60%, that will obviously give us our credit sales for the month. So I actually want to break this down and work out the credit sales, even though we can do it in one step. Right, so let's just quickly work that out. So we're looking at our amount of 84,000. So 84,000, and we're going to obviously multiply that by 60%. And our credit sales for the month of June is 50,400. So let's just write that down, 50,400. Okay, right. Now again, going back to how our debtors are going to pay. So remember, credit sales, 50,400. I think let me just repeat that amount here. And this is obviously sold on credit in the month of June, sold on credit. Okay, so 25% will pay in June, 60% will pay in July, and 12% will now pay in August. And that's what I'm trying to work out. Okay, so I need the 12%. So I'm going to multiply this by 12%. Okay, let's get our sharp calculator out as well. So 50,400 times 12%. And in the month of August, I'm going to receive 6,048 rand. So I'm just going to fill that in. Okay, right. Let's now move on to the month of July. Okay, so remember, we're doing the exact same thing. So in July, my total sales, let's quickly go down to July. So my total sales in July is 77,000. And remember, I need firstly 60% because that is my credit sales. So 77,000. Okay, hopefully you guys can see this. You should be able to, times 60%. Okay, and that gives me credit sales. So again, let's just take out our calculator. Let's clear that. So we've got an amount of 77,000 times 60%. And what I'm selling on credit, 46,200. So let's fill that in, 46,200. So remember, selling in July. So going back to how my debtors will pay. Okay, so once again, 25% will pay in July, 60% will pay in August, and 12% will pay in the next month, which is September. So I need the 60%. What will I receive in August? So I need to now multiply that by 60%. Okay, and in the month of August, I am going to receive from my debtors times a further 60%. I'm going to receive 27,720. So 27,720. Okay, right. As you guys can see, my pen is really playing up. So let's just quickly fix that up. Okay, that should be absolutely fine. Okay, right. One more month to go. So remember, we're now looking at the month of August. And in August, my total sales, let's just quickly take that out. So in August, my total sales is an amount of 77,000. Okay, so once again, I need 60% of that. So let's just write that down, 77,000 times 60%. Okay, and maybe let's try and do it in one step instead of trying to do this in two steps. So remember, 60% will obviously give me my credit sales. And what will I receive in August? In August, I will receive, because that's the month of sale, I will receive 25%. Okay, selling in August, collection within the month of sale, 25%. So remember, we're showing this in one step, times 25. And we should now receive an amount of, so let's get the calculator out. We've got 77,000, so 77,000, okay, times 60%, and then times that by 25%. You guys can use the percentage sign if you want to. I prefer to just use like a decimal, and that gives me 11,550. Okay, so 11,550. Right, so have I answered the question? Almost, not fully, almost answered the question. So what is the total cash from debtors? All I'm doing is now adding up the three amounts. That's all I'm doing, guys. So if I now add up the three amounts, and I'm going to try and use a different color pen now so that it's not confusing for you guys. If I add up these three amounts, let's just quickly do that on our calculator. So we've got already the 11,550 plus the 6,048 plus 27,720. And in the month of August, I'm going to receive 45,318. So 45,318. So obviously not difficult, not a difficult calculation. Make sure you get this correct, right? Practice, remember, makes perfect. Right, so let's now move on to the next calculation, calculate C. Okay, so let's go back to our actual cash budget and let's see exactly what do they want us to calculate. So the amount that is missing, obviously we're looking at C, represents SARS income tax. Now immediately, guys, you would notice SARS income tax is under cash receipts. Now, what does this mean? It clearly means that the business is expecting to receive a refund from SARS. So it could be in the previous financial year, the business overpaid tax, and in the month of August, we are now expecting to receive a refund. So we now need to go to our previous not income statement, rather the balance sheet. So if we look at information 2, okay, please remember guys, it's not the income statement, because the income statement only gives us our tax expense for the year, whereas our balance sheet is going to tell us how much SARS is owing the business. Okay, so here's our balance sheet, or some of the balance sheet figures, and we clearly looking at SARS income tax. So the amount, a debit balance of 3,100. So debit obviously means that SARS is owing the business an amount of 3,100. Any income tax refunds are received in August of the financial year. Right, so here no calculation rather is required. So the amount that SARS owed us, 3,100, will be the amount that we now going to receive from the receiver of revenue. Okay, right, so that should have been quite straightforward. Let's now move on to calculation D, and I need you guys to please pay attention to this particular calculation. So D is looking at your payments to creditors. Okay, so how much will you pay your creditors in the month of July? Right, so looking at the additional information that is given to us, okay, so obviously we're now looking at purchases, and if we go to information number 6, all inventories are purchased on credit and all creditors are paid within the month following the purchase of the stock. Right, so what does this mean, guys? Simply means that you buy on credit and you pay 1 month later. So for example, if I buy on credit in January, I will pay my creditors in February. If I buy on credit in Feb, I will then pay my creditors in March, and so on. Right, so the next bit of information doesn't really affect our answer. It is business policy to maintain stock at 85,000. In other words, that's your fixed level of stock. Now, this info doesn't really affect our answer. Okay, so let's go back to all inventories are purchased on credit and all creditors are paid within the month following the purchase of stock. Now, you would have noticed that they do not tell us how much of stock we've purchased. So how do we go about calculating the amount of stock purchased for the month of July? Right, so we're going to now use information 5, which is going to obviously help us to calculate this amount. Now, I want to very quickly explain a concept. So let's just quickly find space to write. There we go. So I'm just going to use a different colored pen. Please remember, if purchases is not given to you, purchases is always equal to cost of sales. Okay, so I'm going to say that one more time. If your purchases amount, here I'm referring to total purchases, is not given, purchases is then equal to cost of sales. So basically, whatever I purchase, I expect to sell. That is my cost of sales. Okay, right, so going back to our information, the business uses a constant markup. I just want to find that info. So information number 5, the markup will be maintained during the year. In other words, the business uses a constant markup. It's the same as the previous year. Now, why do we need markup? Because if we use the markup as well as sales, we can obviously then calculate our cost of sales. You guys with me? Right, so let's calculate our markup. So let's just quickly go back to the information at the top, right? Remember, accounting students, we are very used to lots of information. We are used to sifting out info. Right, so the income statement given to us for a reason. So the previous financial year, here's my sales and here's my cost of sales. So I'm going to use this information now to work out my markup. Right, so markup is simply gross profit divided by cost of sales times 100. That gives me my markup. Right, so if I now calculate my gross profit, remember sales minus cost of sales gives you your gross profit. So sales 700,000 minus cost of sales 400,000, my gross profit is 300,000. 300,000 divided by cost of sales. So remember, here's my cost of sales figure, 400,000. And we're going to simply multiply this by 100. So let's get our calculator out to work out the markup. It should be 75%, but let's just quickly work that out. So 300,000, I'm leaving out the 3 zeros, divided by 400. Again, I'm leaving out the 3 zeros, times 100, and that gives me a markup of 75%. Right, so now that I have my markup of 75%, how is this going to assist me? So if we now scroll down to our sales, remember we are obviously calculating what is the payment made to creditors in July. Right, so if I look at my sales in the month of June, right, why June? Because whatever I bought on credit in June, I end up paying 1 month later in July. So that is why we're going to look at the month of June. So in June, my sales is 84,000. Remember, I'm trying to work out cost of sales. So taking the 84,000 and the markup, so times, remember, I need to calculate cost of sales, so times 100 divided by 175. I'm just going to quickly fix that, guys. Okay, so times that by 175. Okay, so 175, and that should give me my cost of sales for the month of June. Okay, so let's get the calculator out again. Right, I just want to clear that. So 84,000 times 100 divided by 175. Okay, let's just quickly clear that. Okay, I just want to delete that. So 75, and that gives us 48,000. Okay, and remember what I said earlier on, cost of sales is equal to total purchases. Right, so whatever I sold, right, in June was basically what I bought, so 48,000. And remember, I will end up paying the 48,000 in obviously the month of July. So my answer, how much will you pay your creditors in July? An amount of 48,000. Okay, shouldn't have been too difficult, but I know often students struggle if the purchases amount is not given. Remember, if it's not given, I know I'm repeating myself, but the more I repeat, the more it sticks in your brain, the more you remember this. So if total purchases is not given, grade 12s, make sure you calculate cost of sales. Okay. Right, next calculation, E. So what do they want us to calculate? Right, E is the salaries that they want us to calculate. So immediately I notice in July, the salaries are expected to be 12,300. In August, there seems to be an increase, 13,530. So let's see how much I'm going to be paying my workers in the month of September. Right, so let's go to the additional information about salaries. So if I scroll down, information number 9, 3 employees all earn the same salary. So at the moment, 3 employees earn the same salary. They will be given a 10% increase in August. So we saw that already. A 4th employee will be employed from the 1st of September 2016 on the same salary as the other employees. And remember, the question wants us to calculate what is the salary that we're going to pay in the month of September. Right, so not difficult to do this calculation, guys, quite straightforward. So if we take the total salary in August, watch what I'm doing now. So the total salary is obviously 13,530. All I need to do is divide that by 3. Why am I using 13,530? Because this is after the 10% increase. Okay, you can use the 12,300, but remember, it's going to make your calculation much longer because now you've got to add on the 10%, which is not necessary. Rather use the 13,530. So 13,530 divided by 3, let's do that quickly. So 13,530, do the same on your calculator, guys, divided by 3. And you are getting a monthly salary of 4,500 and, let's just get that calculator out again, 4,510. Right, now remember, from September, you're going to be employing an additional person in the business and they're going to earn the same salary as the other 3. So all I have to do now is take my monthly salary and multiply that by 4, or simply take 13,530 and add on 4,510. Okay, it doesn't really matter, quite straightforward, times 4, and that should give you an amount of 18,040. So that is how much we're going to end up paying in September. Okay, so 18,040. Remember, I first divided by 3 and obviously I then multiplied by 4. Okay, right, next calculation F. So let's go back to the incomplete cash budget. So calculation F, what is your variable operating expenses for the month of September? Okay, variable operating expenses for the month of September. Now remember, often operating expenses change in comparison to the increase in sales. So if we go back to our additional information, and I'm looking now at information 11, variable operating expenses vary in direct proportion to sales. So for example, if sales increases by 4%, then your variable operating expenses may also increase by that percentage. Right, so let's look at what is the relationship between sales and operating expenses, variable operating expenses. Okay, so looking at our cash budget, right, if I scroll down, my variable operating expenses given to me for the month of July, okay, is 3,465. I'm going to take my variable operating expenses and I'm going to now divide this by July, the sales, the total sales for the month of July, to see what is that percentage that variable operating expenses is made up of in comparison to sales. Okay, so I'm taking, once again, variable operating expenses for July divided by my sales for the month of July. Okay, so if I scroll down, my sales for July, total sales, guys, not credit or cash, total sales, 77,000. So if I take the 77,000, okay, and remember, I'm trying to work out what is that direct increase in terms of your variable expenses. Okay, so let's get the calculator out, right? So I just want to clear that quickly. So I've got an amount of 3,465. I'm now dividing that by 77,000. Okay, you can say times 100 as well, right? And as you can see, let's just change that. So, okay, so we're getting 4,5. Okay, so I'm getting a percentage of 4,5%. Right, now how does this help me? Remember, I'm trying to calculate what is the variable operating expenses for the month of September. So if I know variable expenses is 4,5% or 4.5% of sales, okay, so all I need to do is take 4,5% and multiply this by September's sales. Okay, let's just extend the page there. So let's go to the month of September, right? And in September, my total projected sales is an amount of 70,000. I hope you guys can see that. I seem to have erased that. So that amount is 70,000. Yeah, that should make it clearer. Right, so 70,000. Okay, let's just fix that. So times 70,000, and let's do that on our calculator. Okay, so 4.5% times 70,000. Okay, and I'm just going to say divide by 100. Okay, and that should give me an amount of 3,150. So that grade 12s will be your variable operating expenses for the month of September. Okay, so I just want to fill that in our answer sheet, 3,150, and obviously I did the calculations on the previous page. Right, now finally, G, so let's go back to the cash budget. Okay, G, very, very straightforward, guys. I just need a bit of space. So I'm just going to quickly erase because I do need some space here at the bottom. And I'm sure you guys know why. Because as you can see, G represents, let's get a pen out. G represents what is my cash balance at the end of September. Okay, so basically I need to now complete this part of my cash budget. Right, so my cash surplus at the end of July, 8,734, and to this 8,736, sorry, not 34, remember I need to look at what was my opening balance at the beginning of July. So if I go back to my information, right? So how much of cash did I have in my bank account on the 1st of July? Because remember, 30th of June, obviously that's my closing balance, but that becomes my opening balance on the 1st of July. So as you can see, you had very little money in your bank account. You only had 44 Rand, a debit balance. So obviously that was favorable. Right, so that 44 Rand, I'm going to take it through 44 Rand. And at the end of July, the amount of money I have in my bank account, I'm expecting to have an amount of 8,736. Okay, let's just fix that quickly. 8,736 plus 44 Rand. And that gives us 8,780. So 8,780. Right, remember guys, I've got to have to take that through. So at the end of August, my cash surplus, 5,598. And remember, the closing balance in July becomes the opening balance for August. So my opening balance for August, 8,780. And in the end of August, I'm expecting a cash balance of, so let's add plus 5,598, an amount of 14,378. So 14,378. I just want to just check and make sure that I did write the correct amount. Okay, 14,378, correct. Right, so finally, I can now work out G. So in the month of September, there's going to be a shortfall of 14,801 Rand. And remember, again, my closing balance in August becomes the opening balance in September, 14,378. So obviously, in order for me to calculate G, I'm basically subtracting, right? So let's do that. Let's get the calculator out. So minus 14,801, and as you can see, you're going to end up with an overdraft or a negative balance of 423, and that must be in brackets. Okay, right, so we've calculated G. At the end of September, your bank balance is expected to be in overdraft. So remember, your cash budget is obviously helping you to forecast. You are planning what's going to happen in July, August, September. So I'm starting with a favorable balance of 44 Rand, not much, and I'm ending up with an unfavorable balance, an overdraft of 423 Rand. Okay. Right, so we've obviously come to the end of all the calculations. Now let's look at some interpretation. Okay, so the very first question, as far as our interpretation is concerned, in your opinion, does the cash budget of Benco Limited reflect a healthy cash flow for the business? Motivate your answer by discussing 3 items from the cash budget. Okay, so looking at the question, guys, does the cash flow reflect a healthy cash flow for the business? Select or look at 3 items and discuss the 3 items. Right, so in your opinion, does the cash budget of the business reflect a healthy cash flow? You need to answer with either a yes or a no. Motivate by discussing 3 items from the cash budget. Okay, right, now students could either say yes or no. So let's start off with those students that may have said no, the business is not showing a healthy cash flow. Okay, so their argument would be because of the following. At the end of September, the business ends up with a cash shortfall of 14,801 Rand. Now remember, guys, we actually saw that. So if we go back to our cash budget, okay, and if we scroll down, as you can see, the business at the end of September, they ended up with a negative or with a shortfall of 14,801 Rand. Okay. Right, so as you can see, that is clearly indicating a shortfall, indicating that there is going to be an issue in terms of cash flow for that particular month. Okay, so let's go back to our answer. There we go. So that explained. Cash payments exceed cash receipts, and obviously that is why we are ending up with the shortfall. So remember, that would be seen as 1 point. Okay, I know there's 2 bullet points, but that's basically explaining the same point. When will you end up with a shortfall? When your payments are more than your receipts, and that's exactly what happened in September. Right, what else can you talk about? The business started the budget period with a significantly low balance of cash of 44 Rand. Now remember, at the end of June, according to the balance sheet, we only had 44 Rand, a debit balance of 44 Rand in our bank account. So immediately that could have been signs that the business is going to experience a bit of cash flow issues. Right, what else can we talk about? the repayment of loan 20,000 accompanied by the employment of the additional or the extra employee 4,510 Rand added to the budgeted cash shortfall in September. Okay, so remember guys, in the month of September, I'm just trying to quickly go back to the cash budget. Remember, you obviously employed an additional worker and your salary now increased to 18,040 Rand. Right? Then in the month of September, you also making a payment towards your loan. So this is obviously contributing to that shortfall of cash. Right, what else could you mention? So let's just quickly go back to the memo. You could talk about a decline in the expected cash from debtors, a decline in cash sales from July to September. So those are the answers if you said no. If you did, however, say yes, right? Remember, the business was predicted to have a positive cash surplus in the first 2 months of the cash budget, and a shortfall in September is not significant. So if we go back to the cash budget, and I know we're running out of time, we've got like 2 minutes left, but I want to quickly show you guys. So if you did say yes, in the month of July, okay, I've got a surplus of cash. In August, I also have a surplus of cash, and clearly there's a deficit, a shortfall in September. Now, that doesn't necessarily mean that in the future there's going to be cash flow issues. It just means in September, because we are paying the loan, because we hired the extra worker or the employee, that is why we've got that shortfall. But it doesn't mean in the next month there is going to be a shortfall. Okay, because remember, the next month we might not be paying the loan. Okay, right, how much of time? Just a minute left, guys. Okay, so those were some of the answers you could write down, right? And as you can see, you can still talk about the business is still showing items that increase total receipts. So you can talk about the issue of extra shares. You can talk about payments that are coming from your debtors, cash sales. Okay, you can talk about cash sales. And then finally, you can mention if the company monitors its payments and ensures that the cash shortfall does not deteriorate further, we can safely say the business is in a relatively healthy cash situation. So you can say yes. I would, however, be very tempted to say no, because there's much more for me to discuss.